Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Bill Capuzzi, CEO of Apex FinTech Solutions, Jeff Benfield, Head of Advisor Solutions at SEI, and Jackie Rantanen, Head of Investor Solutions, Portfolio Management in Hamilton Lane. They join me to discuss how advisors are leveraging technology to evolve and scale their business. It is great to have everyone with us. Welcome to TradeTalks, and let's go around the horn here. Bill, we'll start with you. Explain to us where Apex FinTech fits within the advisor ecosystem.
Yeah. So thanks for having me. Apex is effectively a platform, and the platform has roughly, we support roughly 25 million end investors, purely B2B. There's about 300 different clients of Apex, and then from an end client perspective, it's about 25 million. Think of us as sort of the Shopify of investing, sort of the plumbing, the back end of our industry. And the sort of maniacal focus for Apex is how do we take all the inefficiencies out of the system? How do we open accounts seamlessly? How do we fund the accounts? How do we do all the trading? Everything behind the scenes, the guts behind these advisors that are out there today.
And Ben, SEI?
Yeah, thanks for having me, Jill. Part of what we're trying to do is connect the financial services industry. With about 1.4 trillion in assets under administration, really what we bring to market is technology, custody, operations, and asset management, and providing that service to our clients and partners across the range of wealth spectrum as well as other institutions.
Right, and Jackie, out of Pennsylvania as well?
Yes, exactly. Good to be here. Hamilton Lane is a leading private market specialist firm. We've been investing in the private markets exclusively for over 3 decades. And so we get to work with a broad range of investors, but as it relates to the advisor universe, we're working to create access points to the private markets for advisors and their clients.
Let's talk about how the advisory industry is changing, Bill. It feels as if out of all industries, it really is at an inflection point, like the technology, the digitization of everything is here, right?
Yeah, it's interesting sitting in my seat, go back to the 300 clients we support, sort of bookends. We have FinTech, bleeding edge FinTech firms that use Apex, SoFi, Stash, Webull, and then on the other side, traditional advisors. And what I'll tell you is that there's a convergence, right? The FinTech firms are moving from left to right to get sort of closer to more passive advisory functions, and the advisors are trying to become much more digital. And the reality of it is, for good reason, right? Which is you think about, 10 years ago, as you grew up, your choice was, okay, I'm going to turn to my parent's advisor. And today, 9 out of 10 individuals will fire their parent's advisor and choose someone new, right? That kind of speaks to them directly. When you couple that with the fact that there's trillions of dollars in motion, right? As baby boomers sort of age out and start to, sort of move the money down generation, that creates this sort of perfect storm where there's better technology, better access, better literacy, financial literacy, at the same time with money in motion, it creates sort of this amazing perfect storm.
And that's what's so interesting about it, Jeff, and I think FinTech is a big catalyst behind this, is that they're really listening to what clients want versus firms telling you what you need to have in your portfolio.
Yeah, without a doubt. And I think to that theme, Jill, it's hyper-personalization. Mm-hmm. So when you think about kind of the pace of change, products, services, technology, and really the demographics that Bill was referencing, the hyper-personalization is really what people are desiring, seeing, and feeling. So when we talk to our clients and we talk to our client firms, it's a lot about how do you meet the client where they are with what they're trying to do in a way that's efficient and effective. So that hyper-personalization and that scale that they're going to be able to provide both to their clients, but also to just how they're operating and what they're operating with, I think, kind of, Bill, to your point, the perfect storm of how's that confluence come together really manifests itself in how the client's interacting with the advisor and ultimately how they're going to market.
Right, and exactly the demand for private markets investments, right? I mean, that really is the client driving that demand.
It really is. I mean, it's no secret. Private markets have been diversifiers and exposures in portfolios for decades, but they're complicated and they're hard to access, and they've really been limited to institutional investors. And at Hamilton Lane, we're really working to change that. So we're creating feeders and structures that allow for a broader set of investors to invest in the private markets. And so it's lower minimums and easier subscriptions and better tax reporting. And so what that means is advisors have a whole set of tools now to work with their clients to enable this really, we would say, important exposure in their portfolios.
Especially as clients are looking for personalization. We've had a number of advisors that have been on, particularly April's Financial Literacy Month, where they see their role almost transitioning into, I wouldn't call it life coach, but a little bit more broad than of financial planning. Certainly these tools allow them to be more empathetic is the word I keep hearing.
Well, with advisors, one of the big obstacles has been data and analytics in the private markets. They really just haven't had them. So they haven't been able to educate themselves, and as you're saying, they haven't been able to work with clients. So at Hamilton Lane, we actually have a lot of data and we're sharing it. And so we're sharing it in a number of different ways, and it's everything from super in-depth data-driven market overview to very digestible chart of the week to what we have built as a kind of purpose-built knowledge center specifically for advisors and their clients to start to be able to understand the private markets. And so that's really to that point of bringing the advisors and their clients together with information and technology delivery at the core.
What are some of the challenges, Jeff, of text scale and its efficiency in being able to implement that?
Yeah, I think one of the things that we're seeing more so is the scale comes through volume. So as things have become more efficient, as friction's gone down, as really the platform and technology has moved forward, volumes are up dramatically. So the challenge that advisors have, and frankly the clients have, are I want to do more now, and being digital and digital first means they can do more when they want to do it. What that means is you need a technology partner and platform that can scale along with you. So really what we pride ourselves on is taking those institutional grade capabilities. We use 10 of the top 20 US banks use the platform, and bringing that down market to allow those same institutional capabilities to scale for really firms of all sizes. So as the volume increases, I think it's really important to have a partner and a platform that can scale with you.
Right, and Bill, what are you seeing from the next gen of investors?
Yeah, look, people want choice, right? So we talk about private markets. Typically that's been something for rich people, right? And the question is, how do you bring that stuff down market? How do you make it such that somebody that doesn't have an account that has $1 million provide the ability to access the things that historically have been for rich people? And again, at Apex, part of the platform, go back to sort of the platform we built, is to scale, is to create the ability to open an account in seconds, be able to fund that account quickly, and then be able to do things like fractional fixed income, right? So if somebody that doesn't have $1 million account, that only has $10,000, historically could never access a corporate bond. Today, they can buy $1,000, $500 of that bond, right? They could buy an alt, right? And historically, they'd never had access to that. That's what folks are looking for. And then the second part is, you talk about literacy, they want to learn. Right? The old generation, baby boomers, it's like, take my money, invest it, and just tell me how much I can spend. This next generation is really interested in understanding the mechanics. How are things working? And then the second part are trying to make sure that they're getting value out of their partners, right? Yeah. So instead of paying 100 basis points for that service, what actually am I getting for 100 basis points, right? Why is it 100 basis points? And then, what are the actual investments that they're actually able to access?
Yeah, it was interesting. I was saying before that it feels as if they're, advisors are shifting to like a life coach almost as well. And I see, the term that you used here is FinancialQuarterback, and I think that's probably a better way to describe it, because you really are, playing that position where, okay, this is what we need to do with finances, this is the education arm, this is what we need to think about the wealth transfer, because not only do we have this massive wealth transfer coming on, but then you also have to think about the next gen of advisor and how they want to interact with their clients. Because to your point, my experience speaking to young folks coming out of school and so forth, they're so articulate and so inquisitive and very thoughtful and deliberate about what they want to do, what they want to know. And I think that is really encouraging that both clients and advisors are demanding that kind of experience.
Totally agree.
I think there's another piece to that, Jill, too, which is collaboration. So when you think about the collaboration, it's really how do you give the capability to the advisor and the client to get information how they want to receive it. And ultimately that goes to the next generation, but also to boomers. I mean, the reality is people are digital. It's part of our lives. It's part of our daily lives. And really that collaboration allows that trend to continue to go, let me get the information that I want to in order to make the decisions, but really have confidence in the decision that I'm going to make, because we make so many decisions every day. I mean, statistics say we make 35,000 decisions a day. Many of them are subconscious, but the ones that we have that are financial, for a lot of them are stressful. So how do you educate? How do you create? But how do you make sure that they can make those decisions with confidence, and having tools and technology to be able to support those decisions?
And you must have read my mind, speaking of subconscious, because of course we're going to bring AI into this conversation, because that is certainly the technology that Bill is allowing us to make decisions in a more organized fashion.
Yep. Yeah. So look, we're obviously in really early innings around AI, and the places where there's applicability is, let's just start with customer service, right? There's a big opportunity for us to just lower costs and provide tools to allow customers to interact with their investments through AI, right? Where it used to be a team of people here in the States, then it was offshored, to a different country. Now there's tools that allow people to interact with their investments and get real answers, empathetic answers through these AI tools. One. Two is there's still a lot of friction in our world, right? In our world. So you think about how many people work at our companies and how many things we're doing that are just sort of rote mechanics, right? The path for us, at least at Apex, is how do you eliminate all those stupid things, right? So start thinking about things like fraud detection. It's a problem in our industry. There's a lot of fraud that still happens in our industry. These tools, being able to detect those things, right, is much better than a human able to do those things.
Right.
And so AI is allowing you to sort of dig in, create models, and eliminate a lot of friction that's in the system today.
I also think that with these tools available, that it could help attract more advisors to the industry.
Absolutely.
Because instead of thinking, oh, this is so administrative and I have to deal with this and the books and so forth, it might inspire next gen.
We totally agree. And at Hamilton Lane, we really think there's a need for a digital transformation, certainly in the private markets. And we're a big investor in leading technology companies, early stage. One example, when you speak of AI, is a group, something we're working on called Helix by HL, and that is meant for the advisor universe to really allow them to have a generative AI chatbot interface, really simplifying private markets information. So that allows them to be smarter, it allows them to ask the questions and then to help them make informed decision making. Now, it's early days, but we're really excited to see where that might take us.
Jeff, do you think smaller firms are struggling to keep up with this transition?
Yeah, I mean, I think that's one of the challenges that smaller firms are going to face, which is how do I make the decisions that I need to make that I can basically do independent of what I kind of need to do every day. And I really think the partnership aspect of that goes a long way in saying, how do you create the right partnerships and the right partners to help them make the decisions that allow me as a small firm to be impacted by those decisions? I think AI is one example of that, and I think to both of the points of the panelists, we're on a spectrum, and we're early innings on the spectrum, and we've created synonymous natures of artificial intelligence with generative AI. And I think the frontier of AI is a lot broader and a lot bigger. It's part of why we've chosen to make the investments that we have, $10 million with Tiffin, just to say, how do we take expertise from other companies and infuse that into this so that we can provide those services to small firms, mid-sized firms, and large firms, and allow that to be sort of the advantage of the partnership versus forcing them to do it themselves.
Do you think we'll start to see consolidation in this space for smaller firms, either that have a very specific niche or just don't have the capital to be able to keep up with this transition?
I think consolidation is a trend we'll likely continue to see. I think it's more around how do you find the space that you can differentiate to be able to then either be a bolt-on or a continuation of that. But I think consolidation is just natural within the industry, and ultimately how firms will then evolve and grow as well.
Yeah, do you think?
Yeah, it's actually, the conversations have picked up meaningfully since the beginning of this year, just around combinations. And part of it is, like you said, is the smaller firms, they had runway, right? And they're running out of runway, and it's really hard for a small firm to raise money these days. The second part is you have private equity that's sitting on a lot of capital, right, that needs to put it to work. Those two, and then thirdly is the markets are behaving a lot better than they were over the last 2 years. Those three pieces, put them together, is creating lots of conversations, and we're starting to see those combinations, right? Mergers, acquisitions, they're starting to play out. My expectation going into the election, we'll see quite a few more, partly because people have run out of runway. I think secondly, there's really interesting, A and B, putting them together, the 1 and 1 equals 3. We'll start to see more of that, which I think is really good for our industry.
Yeah, I think so too, especially when you go back to the specialization conversation, right? So rather than just being one niche for one particular type of advisor, if you have it all under one umbrella, then that's when you start thinking, the tentacles kind of reach out.
That's absolutely right. I mean, advisors need choice, clients want choice, and so being able to offer an array of strategies and an array of kind of access points we think is really important. It's certainly the way that we've focused on building our business to work with advisors.
Yeah, I think the way specialization is driving the industry and that client demand. I mean, we were talking just, Bill, you had made a point before around private markets and you know, demand for these specialized type of products. If the demand is there will be a product. Yeah. I mean, if there's a market for it, if there's a demand for it, there is a wrapper that will go around this.
I think it's the service and product evolution as well. I mean, as we've looked over the last couple decades, I mean, what advisors bring to the market has changed dramatically, of the old services of just one niche or one sort of aspect of their business now to financial quarterbacks and coaches that go beyond that. I think furthermore, as these small companies look to continue to be able to bundle those together, the services, the products, and then the technology that supports it naturally evolves, and ultimately you create the platforms of the future.
Yeah, I feel like if we had this conversation 3 to 5 years from now, it would look very different, the industry, than it does. I mean, and yes, a lot of that is related to AI, and as the technology evolves, it moves quicker and quicker. I believe it's Moore's Law is what that is.
Yep.
Each iteration of technology, but I really think, you know, if we put your Outlook hats on, Bill, right, in 3 to 5 years, I think this is going to look very different.
Totally agree. You know, think about where we were 3 to 5 years ago to where we are today, right? And then you sort of layer on AI in terms of sort of the accelerant. It should, you know, I talked about bookends today. We have the fintechs over here, we have traditional advisors over here. 5 years, right, the fintechs are going to be advisors, right? Because they have installed clients, right? The old way was like, hey, when you grow up, you have an E-Trade account. When you grow up and you have real money, you sort of move over to someone on this side. But that's not going to happen, right? Because these folks are building tools, as the technology, to be able to keep that person within there, right? The same on this side, which is advisors are adding more technology, right, to be able to meet people where they are today. And so, you know, fast forward today, that notion of hybrid, right, that hyper-personalization we were talking about, overlay, like that's where this is going to go, right?
Yeah.
And I think the cost will also come significantly down for the end investor, which is great.
Yeah, I mean, especially when it comes to private market access for individual investors. I don't think you were thinking about this as much 5 to 10 years ago. Like
no, I mean, and we're really in the early innings, right? The data shows that the private wealth investors have very little to no exposure to the private markets. Right. So we think that them coming into the markets, and there's good reason for them to do so, will be transformative. We think that them bringing their demand around technology and ease of use will be good for the industry. And so we think it's going to be really exciting.
Yeah, I think so too. And Jeff, your final thoughts, if you were to think about this 3 to 5 years from now?
Yeah, I think advisors are still important. I think relationships are still important, but I think partnerships that advisors and their clients have through technology offers and platforms are going to make a difference. So in 3 to 5 years, I think it's going to look different, but there's still going to be people at the center of what actually happens in the opportunity.
And I think we're in agreement that AI is going to help to enable
Absolutely.
that, right? I mean, you have more time to spend
Without a doubt.
with your clients, though, right? Appreciate everyone's insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.